Chelsea fans around
like
that
you,
would
like you, like you, like you. A lot of Chelsea fans like you coming out all of a sudden because of your victory over the weekend. I was in Sunyani over the weekend, so
okay.
I actually watched the game in Sunyani, and
Mm-hmm.
it was nice. Watching and seeing all the Chelsea fans excited and everything. I mean, I was on where I was watching. There was this lady who is a Chelsea fan. She was so excited. And I was like,
Wow.
okay. Well, that's all well and good. We'll talk more about that this morning here on the Super Morning Show.
Mm-hmm.
But also coming up this morning, I know it will be in your bulletin too. The country's debt stock
Yeah.
is increased by 13 billion, taking us to 304 billion by end of first quarter.
Yeah, and
2021.
if you work the math, each person is paying 10,100 CDs.
Okay.
At this point, you can do that for me, right? Add it to yours, and then you
I can pay that for you. But the other challenge is our debt to GDP ratio, which is reduced from the 76% to 70%. And the question is, how is that possible when our debt is going up? Because, in 2016, Dr. Bamia at the time described the approach of calculating our debt to GDP ratio, in the course of the year as deception, and that we should go on and do the right things. This morning, we'll have that conversation. Whether it is possible for us to calculate our debt to GDP ratio, for instance, by the end of the first quarter, we look at our growth, we look at our GDP by the end of the first quarter, and use that and not the projected GDP. Because if you look at it now, projected GDP is 433 billion. It is the projected GDP that we've used in calculating our debt to GDP ratio. What does that mean for the Ghanaian economy?
And I think it's also interesting to point out that is the domestic debt that went up by 163.6 billion. The external debt remained the same. So what does this imply as well for us? Yeah.
So stay with Daryl Kwa and the team for the Joy Business Report here on the Super Morning Show on Joy 99.7 FM.
Hello, welcome to the Joy Business Report. Coming up this morning, each Ghanaian to pay a little above 10,100 Ghana cedis if the country's debt of 304.6 billion cedis is shared amongst a population of 30 million. Also coming up, country's export earnings finally hit pre-pandemic levels, expected to fast-track economic recovery and help city stability. Plus, ExxonMobil abandons exploration works on deepwater West Cape 3 Points area. We have details coming up. Don't go anywhere. My name is Daryl Kwal. Thanks for being with us this morning. Each Ghanaian will be required to pay a little above 10,100 cedis if the country's debt of 304.6 billion cedis is shared amongst a population of 30 million. Now, the country's debt has gone up by 13 billion cedis to hit 304.6 billion cedis in March this year. According to data from the Bank of Ghana, this is equivalent to 70.2% of gross domestic product, lower than 76.1% of GDP registered in December 2020. The domestic debt went up to 163.6 billion cedis at the end of the first quarter of this year, but the external debt remained the same. Research fellow at the Institute of Fiscal Studies, Dr. Said Bwachi, says a rising debt is not good for the economy.
There is the easy way that this government, when they were in the opposition, they were criticizing the previous government, and it is right. Use somebody's money to build your country. For now, you have access to the dollars. After all, it can help to stabilize your city, which is a political thing in this country. And you can also have money to continue to fund so many things you talk about, to please the electorate. That is the easy way. But in the long term, it's very dangerous for this country. So definitely the country does not have the priorities right.
That was Dr. Said Bwachi, a research fellow at the Institute of Fiscal Studies. Now, the country's earnings from exports have hit levels similar to what was recorded just before COVID-19. New Bank of Ghana data shows that for the first 4 months of this year, Ghana secured 5.1 billion cedis extra earnings. John Duafe has more on this and other issues identified in the Bank of Ghana's economic and financial data.
The data showed that as at the end of April this year, earnings from cocoa stood at $1.8 billion, slightly higher than pre-pandemic levels. Gold also brought in $1.2 billion, while crude oil helped the country secure $1.1 billion. With the exception of cocoa, all the other exports slightly exceeded what we got last year. On the import side, the country spent $4.3 billion to finance non-oil needs as well as crude oil and petroleum products. The improved earnings can be attributed to a pickup in commodity prices on the global level and consumption improving slightly because of easing of COVID-19 restrictions. Another development that could be described as interesting is that non-oil imports have not gone beyond pre-pandemic levels. However, with crude oil prices going up, that could come with some mixed benefits. While it could be good news for us because of our exports, on the other hand, it could be bad for us when it comes to consumption of petroleum products because of its impact on fuel prices at the pumps. Based on the export and import numbers, the country recorded a trade balance of $756 million. These earnings could go a long way to stabilize the Ghana cedi, as the country's international reserves had set a record $11 billion as at the end of April this year. Again from the report, business and consumer confidence have improved strongly, while the data showed that indeed economic activities have picked up strongly, far higher than the pre-pandemic levels.
That report was filed by George Rafi. Now, if you're anxious to see a sharp decline in the cost of borrowing, at least for the next quarter, then you may be disappointed. This is because the policy rate of the Bank of Ghana will remain unchanged as the governor announces developments in the economy and makes projections, including inflation and exchange rate for the next quarter. Despite forecasts that the policy rate will go down by the end of the first half of this year to ease cost of credit, it does not look so because of some perceived risks in the economy, particularly higher debt and financing gap. This has consequently reduced the money in circulation since the beginning of the year. Dr. Richmond Ituaine is a banking consultant.
Looking at the various things that has happened over the last, including the announcement of taxes on fuel and others, and looking at the crude oil prices rising up to $68 per barrel, and other exigencies in the economy, I don't think the policy rate can come down just in the near future. It has to stay there for some time. And don't forget, the policy rate level also would have something to do with the interest rate. So we are in a dichotomy. We either keep the policy rate where it is and let the private sector not get access to cheap credit to expand the economy. So it's a decision that has to be taken strategically to look at where we want to go.
Dr. Richmond Ituaine is a banking consultant, and the average lending rate has fallen by 0.04% since the beginning of the year. There's more economic news for you. The Bank of Ghana's updated composite index of economic activity recorded an annual growth of 26.8% in March this year, signifying increasing development in production, distribution, and consumption of goods and services since the emergence of COVID-19. This is compared with the 13.9% growth recorded in January 2021. Charles Nixon Yeboah has more.
The key drivers of economic activity during the period were port activity, construction, industrial consumption of electricity, domestic VAT, and to some extent passenger arrivals at the airport. According to a graphical data by the Bank of Ghana, port activity rose from about 62,000 in January to 69,000 in terms of container traffic in March this year. This shows that there had been more import and export, which is expected to bring in the much-needed tax revenue for the country to meet its 2021 revenue target. Port activity was relatively lower in the first quarter of last year, whereby COVID-19 pandemic had begun in some advanced economies. As a result, it dipped significantly during the epic period of COVID-19 in March, April, and May last year. Sales of cement, which is the key material in construction of houses and other buildings, also witnessed some significant growth. For passenger arrivals at the airport, the numbers have seen some encouragement, though it is yet to hit pre-COVID-19 pandemic levels. Overall, the economy appears to be gathering some momentum as there has been significant decline in coronavirus infections, which has culminated in further easing of restrictions.
Charles Nixon about with that report. You're listening to the Joy Business Report. In other news, the Minister of Trade, Alan Chemanteng, will be meeting a high-powered Nigerian government delegation today over the Ghana-Nigeria retail trade impasse. Now, the meeting is set to be a platform for both countries to find a lasting solution to the over a decade-old challenge of retail trade in Ghana's market. The Trade Industry and Investment Minister for Nigeria, Richard Adebayo, is leading the Nigerian delegation to this meeting in Accra. Meanwhile, the Ghana Union of Traders Association, the Association of Ghana Industries, and other trade-related organizations in the country are expected to be in attendance. Joy Business has got our eyes on this for you. We will be reporting the outcome of this important meeting. Turning next to oil and gas, U.S. oil exploration giant ExxonMobil has abandoned oil exploration activities at Deepwater West Cape 3 Points area, which is offshore in the western region. Sources say the decision has been formally communicated to its partners on the oil block. It's not clear what the official reason for this move is, but persons close to the U.S. oil giant say it's due to a recent record loss boosted by the company. The oil giant is also working to halt new explorations around the world because of this challenge. GNPC and GWEL are the two other partners of this block. We are, however, yet to establish whether enough work has been done by ExxonMobil for a new operator to take over, and this move could be a big blow to the oil industry. And that takes us to the commodity market this morning. Crude oil recorded a marginal increase to open trading at $69 a barrel. Gold is selling at $1,905.55 an ounce after going up by almost $2. Cocoa is trading at $2,456 a ton after losing $12 from the last trading. Now, GCB and Farm Milk are the stocks to look out for by investors on the Ghana Stock Exchange this week. Let's now hear from Efua Mensah Bonsu of Data Bank Research.
We focused lively trading activity on the floor of the Ghana Stock Exchange this week, with GCB Bank and Fan Milk tipped to record some gains as the market dynamics show bids above their current market prices. For Joy Business Report, Efua Mensah Bonsu of Data Bank Research.
And on the currency market, the cedi maintained its firm stability against the dollar as 5 cedis 78 pesos should get you a dollar this morning. The British pound going for 8 cedis 24 pesos, and the euro on the other hand will be selling at 7 cedis 12 pesos. There's more news on our website, myjoyonline.com/business. My name is Darryl Kwao. Back to Kojo Yangson, who is in blue, I guess in solidarity with Chelsea fans.
Yes, I'm congratulating Chelsea. They've had an amazing feat, and I know that the fans are very excited.
Yeah,
but Swansea will come one day.
Hey.
Yeah,
that will be the next century.
What are you talking about? we are inspired. We are inspired by Chelsea, and we are going to do
word for the week, Kojo. Focus. Goodbye.
Goodbye. Darryl Kwao and the team will return tomorrow with more from the world of business. But of course, during the day, you can catch the Joy Business Report and other business bulletins throughout our major